So today in this video, I'm going to introduce you to the top stock to buy today. Okay, with that, I want to welcome you back, fellow speculators, to TSE and Stocks Now. I'm your host, Berg. Let's go ahead and get a move on because time is money. All right, so the stock that we're going to go over today is HCA, which is HCA Healthcare Inc. They're in the healthcare sector and healthcare providers industry. So let me apologize first for not making a video going over some charts in the past week. I've been busy and the markets have been chaotic, and it's been a little hard to maneuver through these markets. But this was pretty much expected, and I should have been going over it, but I didn't. So I apologize. The markets are still rough. We're still going through some volatility here. This today is more of a what's called a bull trap, meaning that we do have short-term and buyers coming in right here, just buying right here at this, of what happened yesterday. Of course, it was like a Bloody Monday. If you know anything about Bloody Monday, you can go back to, I think it was 1987, and look at the past on that and read about it. It's pretty interesting, but it was kind of like that to a degree. The major indices falling pretty hard, but last week we had a lot of distribution, meaning that we had more institutional selling happening last week, and it was practically all week last week. I mean, it was every day. And yesterday we had a brutal distribution day. Practically it was 6 times that of the accumulation. So not a good sign. So I don't think we're out of the woods here. We probably, or let's put it this way, we might have more downside to come. And so it's very tough to trade in a volatile market like that, or like this. But you just got to find those top stocks and find those high alpha stocks and understand buying into strength. And not only that, you want to be more of a short-term trader. You want to be quick. You want to be quick on your feet, and lower your risk, meaning tighten it. So if you're normally putting your stop loss at, let's say, anywhere between 5 to 8%, cut that in half. So if you're at 5%, cut your stop loss, put your stop loss at 2.5%. That'll be your risk. Take your profits at 5% or 6%. Okay. That's how you want to do that. That's how you want to maneuver through this market. You got to, just like the sign says up there, and you got to be able to change. Okay. You got to be like the strongest tree in a hurricane. You got to be able to be flexible and bend with this environment. Okay, that's the importance of this. This is what you have to do. So anyway, what we're going to do is we're going to go over this chart with HCA, and we're going to dive into the fundamentals, and we're going to flip over to the news. I probably will go over a couple of other charts just to show you, how to manage your risk to reward and stuff, how to do that, but it'll be really quick. But let's go ahead and go over this chart real quick. So practically what we're in this major uptrend right here, stage 2 accumulation. Okay, so we do have a nice prior uptrend right here, greater than 25%. We do build this nice base, which is just more of a kind of a cup with a little handle right here. And we blast out today because they had earnings. HCA had earnings, and they had excellent earnings. And it's not wise to actually play into earnings or even hold into earnings. And if you do hold into earnings, you better hope that you bought earlier than that and that you were at a profit, because then you can take the majority of that off the table and your principal off the table and let some ride, just due to the fact that there could be a possibility with a huge rise in the stock. And of course today it's up, I think, over 14% as we're talking right now. So I mean, that's a big day for HCA. Okay, so I don't recommend necessarily buying into this right now, but you can, because it may have some more juice to the upside right here. But let's say when we're buying here, if you look, okay, if you're looking at price action, we have this nice cup with handle here. We have nice low volume, nice tight price action for several days, okay, within this range, within this handle. Not only that, we have volume drying up. This is what we want to see. And then we have this burst, boom, okay. Not only that, we have the shorter term moving averages being above the longer term moving averages, okay. As you can see, the 10, the 20, the 50, the 150, and the 200, okay. Not only that, they're also rising. So that's good. You want to be buying into that because that's a momentum, okay? That's momentum. The stock has, the price has momentum behind it. So it's moving in that direction. So we get this nice springboard action. So the possibility what can happen here, if you're going to buy today, place your stop, let's see here, at the low of today, okay? If you're going to short term, this is just more of a swing trade. But you're going to cut it off at around, let's say, well, let me see what that is. Hold on one second here. Okay, so let's see here. So from the close to the low is around 4.5%, okay? Not too bad of a stop, not a bad risk at all. Okay, so I mean, this stock, what could happen is we could see this pull back, and if it covers this gap up, then we know this is not, it's a false breakout and it's not a runaway gap, okay? So that's not a breakout gap. If it comes back and it covers this yesterday, okay? So we don't want to see that, but as long as it holds right here at the low and kind of just plays around right here for maybe a few days and then starts moving up, then this stock, you know, it has enough legs, it has enough room to run, okay? So there's not any supply to the left of the chart, okay? So that's good to know. It's good to see. That's what you're looking for. But anyway, so practically just play this one safe, put your stop. Your risk is going to be at 4.5% at the low of today, and hopefully we can get a boost tomorrow, okay? So if you're buying today. Now, if you're a short-term trader, you're going to cut it off, you know, at around 1 to 2.5%. and take your profits anywhere between 3 to 5%, okay? And that's what I've been doing. Matter of fact, I did it last week, and I did really well last week, even in a brutal market as what it was last week. But I quit trading on Wednesday of last week because I wasn't finding any valuable trades, anything with the risk to reward that I like. And so anyway, it's kind of like that today as well, but I mean, it's not too bad. So anyway, so that's how you would do that. But let's go on. Let's look at a couple more charts, and I'll show you here as to, you know, when you're managing your risk to reward as, you know, as what you need to do here. So let's say, so this stock is PCTY. This is Pay Low City Holdings, okay? So practically what we have is we have this nice breakout, kind of like a flag right here. This is called a flag pattern, okay? Really good pattern, really nice tight pattern right here too as well. So what you're looking at is you're looking at the resistance right here, okay? So it's surpassed a lot of resistance. Not only that, the resistance over the high of the flag, okay? So what you want out of this stock, what you expect is it to get up to the highs, to the 52-week highs at around $218.34. So this is how you manage your risk according to your reward. So our reward, what we expect is we expect it to get up there to that $218, okay? So that $218 level is going to be, if you were to buy today, that would give you at about nearly a, you know, 8% gain, okay? So what you're going to do, what you're going to look at right here is you're going to say, okay, well, I want my reward to be at least 3 times that, okay? 3 times your risk is what I'm saying. So if our reward is 8%, well, 3 times of that, so you're gonna place your risk or your stop loss at around 2 to 2.5%, and that'll give you enough leverage or enough room, because if that gets up there to that $218, you reach your profit target or 8%. Well, that gives you that 3 to 1 reward to risk ratio, okay? And that's what you want to do, and this is how you make money. This is how you compound money. It's a process. This is the process of trading. You take it and the thing with this is that there's opportunity all the time. I mean, sometimes it seems a little rough, but you can find these stocks that are ready to move according to your reward to risk ratio, okay? And that's the great thing about the market, and it's just a process. You work on turning that money over, your principal, over and over with your profits, and it's compounding, okay? And over time, I mean, if you're hitting 5% and your risk is, you know, you're hitting 5% reward and your risk is at 1% or 1.5%, well, you're returning, you know, anywhere between 3 to 5 times your risk on your reward. Well, is when you turn that over multiple times, I mean, you gain so much. I mean, you can gain within so many trades. I think it was like 300 trades, let's say at 3% or at 3 times your risk. I mean, you're making over 300% right there. Okay, so that's how that works. It's pretty mind-blowing, but there's always opportunity, and you just got to know how to look for it. But anyway, I just want to point that out. But so let's go ahead and move on to the fundamentals of HCA, what's going on here. So practically, these guys are this guy's actually in a really good industry group rank at 11 right here. It is ranked number 3 out of its group, and let me go right here and show you as well with this here. So practically what they own and operate 178 general acute care hospitals with 48,492 licensed beds in 20 states and in England. Okay, so their group relative strength rating is an A+. They did have earnings. Their earnings per share rating is a 94 according to IBD, or Investors Business Daily. The earnings per share percent change last quarter is 35%, with the 48.9% in 3 quarters of average earnings per share growth. Okay, that's awesome to see. This is great. Consecutive years of annual earnings per share growth has been 3 years. 3 years of earnings per share growth rate has been 19%. Okay, not bad at all. Their sales percent change last quarter was at 30%, and that's excellent to see. Okay, the annual pre-tax margin is okay. It's not bad, and their debt to equity ratio sucks, but hey, it is what it is. Percent change in funds owning the stock is 3%, with the 4 quarters of increasing fund ownership. So practically, we know that we do have increasing fund ownership. We do have, you know, like institutions, hedge funds, and that's what you want to see. You want to swim with those guys. And not only that, let me point something else out, okay? With this type of market right now, what's going on is what you have to do, what you need to do is you need to find these high alpha stocks, meaning the ones that are performing better than the indices on average, and that means relative strength wise, okay? Key, relative strength, price performance, okay? And not only that, they're in one of the best industries, okay? With this group relative strength rating at least at an A, okay? This is the key of trading this market and being in this market. This is what you're looking for, those stocks that are in the best industries, okay? The top industries. And that's where you want to be swimming, and that's where you want to be trading, okay? So other than that, let's go ahead and move on to the news for this one. And what's practically, like I said, we do have earnings here. So HCA Healthcare reports second quarter 2021 results, raises 2021 guidance. So they had an excellent earnings come off right here. So today, which is great to see. Not only that, the price, of course, matched that, and investors loved it. But they do have a lot of other things going on besides that investors really see and what they really like, okay? So practically what they do have right here, so what's going on is HCA Healthcare partners with Google Cloud to accelerate digital transformation, which this was put on May 26, 2021. And then on, let's see here, May 20th, HCA Healthcare to give $10 million to HBCUs and HSIs. So, I mean, they're giving funds, they're giving, you know, grants and all that, $50 million fund to provide grants in 25 communities it serves. So they're doing a lot here. I mean, they're doing really well. Not only that, they're also restructuring too. They're selling some hospitals that probably aren't making them money. They're probably in more of a losing position on these, and they're getting rid of them, they're selling them, and they're cutting their losses and moving on. This is good to see. So you know that management is up to date, and they're working on trying to get their business, provide shareholder value. Okay, and so this is what they're doing. So they sell North Georgia Hospital to Advent Health. They're on May 13, 2021. May 3rd, 2021, they sell 4 of its hospitals in Georgia to Piedmont Healthcare. So I mean, these guys are doing pretty good. Not only that, HCA Healthcare named a 2021 top company by LinkedIn on April 30th, 2021. So these guys have a lot of good things that are developing for them, and investors see it and they like what they're doing. And of course, management is doing what they need to do. So that's a good thing to see. So when you cut your losses, and especially when you see a business doing that, that means that management is in tune with their business. They know what's going on, and that's, like I said, that's a good thing to see. So other than that, I'm going to go ahead and leave it off right here. I want to thank you for watching and subscribing. If you haven't already, you can click on the subscribe button, the notification button, and the like. Please like the video. Leave a comment. If you have any questions, I'll be more than happy to help you with that. So other than that, I want to apologize again for not producing a video, but when you're trading this market, be very cautious and just get ready for more volatility. I don't know that. I mean, I just suspect it, and that's all there is to it. I mean, with the major distribution day that we had yesterday, not good. So other than that, just be informed, stay warned, and I'm going to be here developing more videos, trying to get you some better trades and help you through this environment. Okay, so this, like I said, it's rough. But other than that, thank you again for watching. And here at TSC, we trade in the present, study the past for knowledge, and follow the process of trading to build our futures. Opportunities awaits, my friends.